Good afternoon, everyone. Great to have your company on 𝐾𝐿𝐼𝐴 TV. I'm Sage, and you're watching The Buzzing Trends, a specially curated show that brings to you emerging trends driving the market momentum and the related stocks under the spotlight. Well, in today's show, we're going to take a look at the ASX-listed stocks to keep an eye on ahead of the August earnings season. And in the first segment of the show, we will look at why tracking earnings season is important. And next, we will zoom our lens on the prominent stocks under the spotlight. And then in the last segment, we'll look at the overall expectations surrounding the upcoming earnings releases. So without any further ado, let's get started with our first segment of the show. The earnings season is an important time for investors who take portfolio decisions based on beats versus misses of the business results with respect to the market expectations, and review of a company's earnings plays an important role in the assessment of the intrinsic value of its stock. And robust earnings reports drive markets in a favourable direction, though there are other strings attached in driving the market momentum too. For instance, while second quarter earnings results are broadly beating expectations in the ongoing US reporting season, investors appear to be more concerned about the rising inflation since mid-June, which could prompt a sooner than anticipated tightening of the monetary policy. And yet the forward-looking investors seem to be looking past current results while fretting over the impact of high inflation on the future earnings of corporates. And on that note, in our second segment of the show, let us look at some of the ASX-listed companies under the spotlight for the August reporting season. And first on the list is Coles Group. It is a supermarket giant in Australia and an arch rival to Woolworths in the first 4 weeks of quarter four of the financial year 2021. Supermarket sales increased by approximately 4%, and in the last filings, Coles expected both capital and operating expenditure investments in strategic initiatives to be continued for the remainder of the year. Let's take a look at the next stock under the spotlight, Afterpay, one of the dominant buy now, pay later players in Australia. And Afterpay had a great financial year 2021 so far. And in the third quarter, the underlying sales in the US were up 211% and 277% in the UK. The BNPL company is currently working with external advisors to explore options for a US listing, as the US market is now the largest contributor to its business. Next on our list is the company that is also keenly eyeing to buy market players, Redbubble. And the Redbubble Group owns and operates the leading global online marketplaces, providing high quality everyday products. It has clocked a marketplace revenue of 456 million Australian dollars, up 85% over the same period last year. And while earnings before interest and tax turned positive compared to a loss in the financial year 2020. And next up, Youfoodz also deserves special attention with respect to upcoming earnings releases. Youfoodz is one of the fastest growing consumer food brands in the country. The company has clocked a gross revenue of 50 million Australian dollars and expects next year's gross revenue to be delivered in the range of 201 to 205 million Australian dollars. And this reflects a strong headline growth driven by the B2C, with overall revenue mix for the financial year 2021 increasing in favour of this segment. And now we're just going to take a short break on 𝐾𝐿𝐼𝐴 TV, but stay tuned with us as we'll take you through more of the interesting stocks to keep an eye on, given the expectations around the upcoming earnings season.
Hi, this is Andy Liu broadcasting from 𝐊𝐼𝐴 Media Studio in Australia, and I'll be hosting the new 𝐊𝐼𝐴 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐼𝐴 TV and join me.
Yes, welcome back viewers. This is Sage. You're watching The Buzzing Trends, and today we're discussing the prominent stocks under the radar while August earnings season is just around the corner. And moving on, let us zoom our lens on Woolworths Group. It is another supermarket giant in Australia, and the group expects to report a 57 million Australian dollar pre-tax significant item net gain in its financial year 2021 results. The numbers will be released on the 26th of August 2021. It is also believed that because of the acquisition of an additional 27.8% stake in Quantium, the supermarket giant will register a non-cash gain of approximately 220 million Australian dollars. And for your information, Woolworths spent $223 million in April this year to lift its shareholding from 47% up to 75% in data analytics firm Quantium. And next under the radar is CSL. It is a biotechnology firm aiming to treat and prevent serious health conditions, and as the COVID-19 pandemic recedes and social mobility increases, the company expects growth in doctor visits, elective and emergency procedures, leading to growth in its product demand. However, reduced plasma collections in the COVID-19 environment, leading to constrained sales and elevated cost of goods sold, would be evident in the upcoming filings for CSL. Let's move on again. The market players are also placing expectations on the earnings release of Origin Energy. And while it is an oil and gas exploration company based in Australia, and the combination of strong production and operating and cost discipline has helped to reduce the financial year 2021 distribution to break even. Origin Energy continues to target significant retail cost savings and is on track to achieve 100 million Australian dollars in savings by the end of financial year 2021. Well, viewers, hopefully the discussion on the prominent ASX stocks in lieu of the upcoming earnings season was informative. Let us now jump over to the last segment where we will touch upon the broader market expectations on the earnings of specific sectors, given the overall market volatility. And as per the market analysts, there can be solid earnings from major Australian banks, which were able to draw in profitable results with improved cash balance during the pandemic. And in fact, the market may witness normalisation of dividends at major Australian banks, as they are no longer facing any cap on dividend payments. Akin to banks, miners may also lift their dividend payouts while benefiting from the buoyant resources prices over the last 1 year. And meanwhile, certain technology players may face significant earnings hit. Tech businesses encountered suppressed valuations amid the inflation expectations and rising bond yields in the first half of the year. Having said that, the current lockdown scenario has reignited the attractiveness of the technology sector, bolstering the potential for digital transformation. And looking ahead, the monetary policy support, pace of the global economic recovery and containment of the COVID-19 spread are expected to chart out the direction of the equity markets. Thanks again, viewers, for joining us on that report. Hopefully it was of good use to you. We have another Buzzing Trends show at 2:40 p.m. or thereabouts today, bringing more interesting market updates to you. And meanwhile, stay tuned to 𝐾ALKINE TV for the latest updated on the different sectors, economies and markets. This is Sage signing off.